Hello everybody and welcome back to another video, and today we have new research from Grayscale reveals Bitcoin is currently trading more like a high risk growth asset similar to software and tech stocks than digital gold. In the short term, BTC's price moves are closely tied to equities, especially software companies facing AI disruption fears. Unlike gold, which has railed to records, Bitcoin has dropped sharply, down about 50% from its high in October 2025, above 126,000 US dollars, recently hitting around 60 USD before recovering to about 68 to 70,000. Grayscale stresses this isn't a failure. Bitcoin's behavior reflects its growing integration into traditional finance through institutions, ETFs, and macro risk sentiments. This is part of Bitcoin's natural evolution, they say. It still holds strong long-term store of value traits like fixed supply and independence from central banks, and has massively outperformed gold over the past decade. As adoption deepens in addition digitized world with AI, tokenized assets and better regulation, Bitcoin could mature into a true safe haven asset. But for now, it's acting like an emerging tech volatile, but with huge upside potential. Why this is good for crypto long term? This is a shift that could be bullish long term, because it signals Bitcoin's maturity and mainstream integration rather than weakness. Deeper ties to the traditional markets, for example via your ETFs and your institutional money, mean Bitcoin is no longer isolated. It's becoming a legitimate part of global portfolios, which attracts more capital over time. Growth asset phase is normal for disruptive technologies. If you think like the early internet stocks, high correlation with equities reflects risk on, risk off sentiment. But as Bitcoin matures, correlations should decrease, and it could behave more like gold, where you want the lower volatility and better hedge. Grayscale views it as evolution, not a setback. Bitcoin's core strengths are scarcity and decentralization. They remain intact for long-term value storage. In a world heading towards AI, autonomous agents, and tokenized finance, Bitcoin is positioned to gain monetary relevance gradually. Historically, outperformance persists. BTC has delivered far higher annual returns than gold over the last decade, rewarding holders through the cycles. Recovery drivers like renewed ETF inflows, retail return, regulatory process like stablecoins, tokenization, those sorts of things, and broader adoption could fuel the next leg up. So, in short, the short-term pain for acting like a volatile tech, but long-term gain from becoming a core digitized asset class. Disintegration paves the way for greater stability and adoption, ultimately strengthening crypto's role in the future economy. Please do like and subscribe, and I'll see you in the next video. Bye.